Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Wednesday, June the 29th, 2016. My name's Doug McKay. I'm the founder of Quantum Leap Futures, and each morning we get together in this live session, excuse me, to take a look at the market macro to micro, drill down to the structure of the market and the trade levels and the targets and our hypotheses for the day. Before we get going, please read through the disclaimer. Nobody at Quantum Leap is a certified trade advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, taking a look at yesterday. That's the profile day. Our main hypothesis was a hypo 1 was a move down and then a rotation up from somewhere in the 2000 to 1997 and a quarter level, and then rotate up. Our second hypothesis was a open auction in range, then move out, find responsive sellers somewhere between 1650 and the 11 and a quarter, and then rotate down through back towards that 96 level. Hypo 3 was an open auction in range, a move up, chop around, and then make a push through up into the 25 to 29 area with a possible late day probe up into the 30s. We kind of got part of hypo 2 and part of hypo 3. We broke out, we came back, we couldn't get back inside and hold inside of the day range, and then we chopped around at the 2011 area, and then we finally broke out in the afternoon and pushed up, chopped in the 24-25 area, and then pushed up into the close. We had a neutral extreme day. We closed at the high, and we broke the IB to the low side and the IB to the high side. Last night I said look for continuation higher. Remember yesterday in the pre-market session we were talking about that 25 level and how important it was if we got up above that we'd likely go back up into that area of undetermined fair value that centers around the composite and the microcomposite VPOC at 2042, and here we are trading at the 2043.75, 2044 area now. Taking a look at the news. We had core PCE, price index, personal spending, and personal income. They all came in pretty much as expected. Personal income month over month was slightly less at 0.2 versus expected 0.3. We have pending home sales at 10 a.m. and then we've got crude inventory at 10:30 Eastern time. And that's about the only scheduled news. We do have headline news still with the whole Brexit, but obviously we've hit a rally. I was looking at, I was watching, believe it or not, I was watching Kramer talk about this and talk about the VIX and how the VIX is not in sync with the market right now, and that the fear index is actually going down rather than going up, and he thinks that this rally is sustainable. I don't know. All I know is we're back in balance again. I put this in the room. This is Friday's profile. We're right back smack in the middle of it here at the 44. You should be looking to this date right now for guidance in terms of levels. You can see it's very toothy, so we've got a lot of undetermined fair value here against the microcomposite as well. So just you can pull this up and keep this up on one of your screens to guide you through the day, as I will. Just taking one step back, of course I always like to start my day taking a look at the macro. where we are within the trend. Just going to go up to the monthly chart. I use a 9 EMA and a 20 SMA. I'm looking to see where we are within the trend. You can see that we've had this beautiful long trend in the monthly, and then we challenged it end of 2015, challenged it beginning of 2016, got back above, and then this month we challenged it, but we bounced right back up, and we're right back in balance and just above the 9 and the 20. So possible continuation, we don't know, but certainly in consolidation mode on the monthly. Going on the weekly, we had this upward trend going. We said if we broke below the 9 to target that weekly naked cross down here at 1983 area. What did we do? We came down, hit that 8150, took out the naked cross. This is a great example of naked crosses as magnets on a larger time frame. We finally came down, and we've been watching this 1983 for, I don't know, 20 weeks. A while we've been watching this and talking about this if you want to go back and check some of the older videos. But there we are. We've taken it out. Now we've bounced back, and we're above the 20 but below the 9. So we're back into this consolidation, and we could fail from here as well and come down. But right now we're back, and we could get continuation higher. Going on the daily, you can see we had that big breakdown on the Brexit, and then created a technical gap. Coming up, we're testing the 9 from below. This is going to be a key level for us today, the 2047.50. If we get above that, then I'd be targeting up here in the 2071 area. But we could fail from here. We do have a possible start of a downward trend, and this move up can simply fail and continue down. So don't get your bull hat on or your bear hat on. Just watch what levels we've got on each time frame. We had this downtrend on the 4-hour, and we've now gotten above it, and we're starting to move up. You can see that we've got a naked cross here at 2017. You might want to write that down in your journal. It is on the 4-hour, so we have to respect the time frame that it's in. But we do have a start of an upward trend on the 4-hour. On the 1-hour, you can see same thing. Let me get rid of these drawings. You can see we've got a really strong trend going on the 1-hour. Good slope, good separation. Price is paralleling the 9 nicely. We do have a naked cross down here, all the way down at 1996.25. Just tells me that we're not done with this area below. Although this is on a 1-hour, we don't have to come back down today and take this out. There is a naked cross above us at 2094.75, but I don't think we'll hit that today. Going to the 30-minute, you can see same thing, great slope, great separation, good trend, and price is paralleling the 9 nicely. The trend is still up on the 30-minute. On the 15-minute, same thing. On the 5-minute, same thing. Got a little bit of a technical gap going on the 5-minute. A move down to close that gap will bring us back down into that 2042. 2042 is going to be our magnet today. It is the microcomposite VPOC. It is the composite VPOC. In fact, let's go take a look at it. Take a look at the structure. So we, putting it into context again, for the longest time in the beginning of 2016, from March through until Friday, when Brexit exited, we were trading inside of this upper Gaussian distribution of the last quarter, and this centered around the 2054 microcomposite VPOC, and we had this C microcomposite LVN down here at the 2007. And then the value area high, or sorry, the value area low of this longer or shorter time frame, this one that goes from March 17th through, and I've added in these days now as well since we've rotated back up inside of it. Our microcomposite VPOC is 2042. The composite VPOC that goes all the way back to the beginning of 2013 is 2042 as well. So we're back in this distribution area, this this blunt area of the profile that has all this undetermined fair value that centers around the 42 with 61, 52.50, 42, and 31.50 as undetermined fair value. And we're trading right inside of the 24th Friday's wick. I expect to get stuck in this wick today, and I expect to rotate around in this area. I don't expect that we're going to make any major breakout above or below. We'd have to get above 73 or below that 07. Actually, I would even say you could say 1275, or even use the microcomposite value area low at 23. But we did talk about this. If we got back inside of this area, that we'd rotate up to 42, and they did it in the Globex. Our 20-day ATR is continuing to expand. We're now running a 20-day ATR at 27. That's getting bigger. We had got down, heck, we were running in under 18 just last week, and now we're expanded out to 27 due to the volatility of the last 3 days. Key levels to keep your eye on, that 47, that is the bringing up the profile day. 47.50 is the naked VPOC that we've left below. I'm looking to challenge that today. I expect it to be rotational within this area. You can see all the undetermined fair value on the profile day, just as you can see it on the longer term as well. You've got the 45.25 just above us. If we get above it, look for 47. A little bit of resistance at 49. Then you got 52.50, 54.25, and then 61 above. Our daily upside ATR target off of the low overnight at 2022.75 is 49.75. So 49.75 puts us at the top of the average true range, and if we get above that, we could look for a trend continuation day and a push up in through into that 61, maybe even 62.75 level if that happens. I'm expecting we're probably going to get stuck somewhere between 52 and 31.50 in total for the RTH session. I have to trade the levels, not what I think. So taking a look at the overnight, so far, we've just put in a new overnight high up at 45.25 off of the news. So that 45.25 is our overnight high so far. We're likely to put in a new overnight high prior to the open. We still have 30 minutes. Our overnight low is all the way down at 22.75. And our overnight VPOC, which is not likely to shift, it could shift, it's at 41.25, just below the magnet, which is the composite, and the VPOC. And then we're pretty toothy on the overnight inventory is net long, so we have to look at where they probably run into some trouble, the longs, and I'm looking at the 31, which is a LVN, but it's also a HVN, and it's also below the developing value area low from overnight. So I think if they get below this 31 level, the longs are going to get themselves in trouble and probably have to cover, and could push us down to test the overnight lows. So 31 is going to be a trade level for me. In fact, we get the range low from overnight, from yesterday, the high from yesterday, RTH session at 29. So I'm actually going to use 29, because if they get, we'll use the 31.50 as a target, and if they get below the 29 is going to be our key line in the sand. So I think then we'll get a bigger rotation below us. Okay, and then just doing the lower levels right now. We don't have anything else I got to worry about on the overnight session, so I can just move this over, get rid of that, open up the profile. So below the 29, there's not a lot down there until we get to that 2250 and the overnight low. But I would be targeting below this 2675, and then the 22 overnight low, and the micro composite value area low on the shorter time frame. On the longer time frame that goes from March 17th through to today. And then below there, a major target is going to be down here at the between the 1750 and the 1850. You've got the LVN. We've got a double distribution day that we created yesterday. This profile, the last 2 days profiles actually look very similar to each other, only in reverse. So we kind of had symmetry on the days, just one played out lower side first, but the two profiles, if you look at these two profiles, let me bring the other profile. These profiles look very similar to each other. A little bit more upper distribution than we did, but that's because we closed near the highs versus here we closed near the lows. But the profiles are pretty similar. So below the 18, the major target is going to be the 1375, and then you've got the 1250 just below it, and then below there I would be targeting the 0975, and then the value area low at 07. Remember that 07 is the microcomposite LVN from the last quarter of the trading year in 2015, and then below that 04, 2000, and all our regular targets that we've been looking at. Our weekly ATR downside target is going to just shift up slightly. What's our high? 2045 and a quarter. Our 20 period weekly is 52.9625. So that takes us to 1992 and a quarter, just below this naked depot. But I don't think we're going to get there today. Our upside ATR weekly ATR target, we're already above. So we've already hit our weekly ATR, and it's only Wednesday, and we can only continue to expand up I doubt we're going to hit the weekly ATR target to the downside now, because the weekly ATR to the downside is down at 92. It's possible, but based on how we're trading, I think we're going to find some balance here. Okay, so those are the levels to the downside. To the upside, we've got the 49.75. That's just above the CLVN at 49. Then we've got the 52.50. Then we got 54.25. This is actually going to be a target. 52.25, 54, and then the main target above is up here at the 61. That's my major target. And then you got 64.75, and then 69.50, and 70.25. And then our key line in the sand above is going to be the 73. Because that takes us above the microcomposite LVN, that is the upper side of this distribution, and probably give us a shot to come up into the 76, 77, and then the next target above, which is the 78. And the 81.25. And then the next big resistance is going to be down at or up at 95.25. And I don't think we have to worry about much beyond that. So what's my hypothesis? My hypothesis is an open auction out of range, duh. Now, we are going to be opening up above the range and above the close. So right now, we're trading at 20.4375, less the close at 20.28.25. That means we've got a 15.5 point gap, which means that we have, I think less than a 15% probability that we'll close that gap. A half gap fill off of where we're trading right now. It's going to bring us into roughly the 36 area. So I'm going to just put that in there. And again, it's an approximate because we don't know where we're opening yet. All right, so main hypothesis, open auction, outer range, move up, take out the overnight high or expand the overnight high depending on where how much time we've got. We could put in a new overnight high above the 45.25. Push through somewhere between the 49.75 and 47.50. I'm expecting responsive selling to step in and then push us down back towards the range and chop around in the 31.50 to 52.50 and just chop in this area. So my main hypothesis is basically open auction out of range, try to push higher, fail, come back down, and rotate back and forth in this blunt area between 52.50 and 31.50. That's hypo 1. Hypo 2 is an open auction in range, out of range, and push down, test the range high, close the gap, chop around in here, and then get continuation and come down into the 17, 18 area and chop around inside of the upper distribution from yesterday. So hypo 2, open auction in range, push down, chop around the range high and the 34 area, and then get a continuation wave down, and then chop around between 18 and 30 inside these upper distribution. I can't speak today. Hypo 3 is an open auction. Come down, okay, come and do a half gap fill, find response or initiative buyers down somewhere in the 34, 36 area, then push up through into the 61 and chop around in the upper distribution in around where we last tried to hold value just before we fell out on Friday, and that's in the 61 to 62 area, and just chop around in there. And then hypo 4 is an open drive, push up, chop around in the 52 area, and then get a continuation wave and come up and take out the 69, 70 and a quarter level and close near the upper distribution. So it continue up, basically a gap and go day where we gap up and get continuation up. So that's hypo 4. So those are my main hypos. I think it's going to be a very rotational day, so be careful. We made a big move down, and now we've taken it back. I think we're above the half back now from the scene of the crime, and just let's take a look at our flex levels. So you've got the 42 here. You get the FOMC up here, non-farm payroll up here. We've got this wide zone here, which is a gap zone. Anybody know what the scene of the crime was for Brexit? I forgot to write it down when it happened. It was somewhere around 16, wasn't it? 2116. Anyway, it's still way above us. I don't think we're going to return to the scene of the crime today. So just be careful. Just take a look at the Keltner real quickly. We're above the Keltner center line. The center line is sitting at 40.75, just above the 24-hour VPOC at 41 and a quarter. The upper Keltner is at 46 and a quarter. That'll take out the overnight high and probably take us up into the 47.50 naked VPOC. Below the 40.75 and move down to the lower Keltner will take us down into that 35, 36 area and that half gap fill. And so we're above our weekly, so we could get expansion, but I'm expecting rotation. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.